It's up a little bit. We're sitting about $200. So, as we just mentioned a minute ago, if it goes up, I just don't want to lose. If it goes sideways, I'd like to make something. And if it goes down, I found a stock that maybe I'm interested in buying. I'd like to acquire it, but I'd like to buy it cheaper. So we're going through this mindset.
Want to go lower?
Yeah, well, I thought it would lower these guys too. But...
Ooh. See the poll on our Twitter?
Wow. Oh, I saw you posted.
It's actually, you know what? I went back and looked at our last poll we did a couple weeks ago. You remember?
Oh, yeah.
It ended up at 50-50.
Really?
Yeah. Right. We had whatever the votes were, it was even 50-50 on 4 times a week or whatever. This one, and I made this one end in 4 hours, so it's going to end right about when the closing beat starts. So,
okay.
So we can relay you that information. Our poll is, I guess we're recording, our poll is, what is it? Would you rather have $1 million up front or $50,000 a year for life for the rest of your life? I didn't take into the taxing situation, whether you're taxed before or after.
Or inflation.
Yeah. But
$1 million.
Taking the $1 million?
Yep.
I agree. I'm going to take the $1 million up front.
Yeah. I mean, I just feel more comfortable if I... It's like if you win the lottery and they're like, do you want the annuity or do you want the payment? Just give me the money.
It's always lump sum.
Yeah.
Always. Always. But that one's currently 60-40 for the $1 million up front or the $50,000 a year for life. So
nice.
It's still pretty close. So I'll give you the results before the closing beat.
Sharing different data today because we're doing... we're calling this the Doe Show, man. Bringing it back.
The Doe Show.
The Doe Show. So outside virus gone. We're calling it the Doe Show. So we can talk about anything that has to do with your money. And we're doing something different where each day has a theme. So Tuesday, it is Tuesday, will be known as Trading Tuesday.
You're looking forward to that.
I'm looking forward to it because it's not my fault that I'm talking about trading. The day was Trading Tuesday.
That's it. I mean, if the day's Trading Tuesday.
I had to,
Even if you came up with Trading Tuesday, it's still not your fault. It's Trading Tuesday.
It's Trading Tuesday. You have to talk about it. So I can't get in any trouble. Today we're going to talk about a specific trade. I'm not telling you to do it, but I'm going to go just full on out here.
Well, you're going like ultra specific on a specific trade?
Ultra specific trade. Really weird way to go about it. I'll give you the thought process.
Oh, wow. That's going to be exciting.
Hang on tight.
So maybe we just ease people in and we'll start with mine.
Let's start slow.
Let's let everyone's
get your mind right because I'm not joking around. I'm going to town on this one today.
Okay. Well, let me just all right, well, let's just start. We got the what's that?
Now I'm nervous.
Now you're nervous for what?
Yeah, bring the goods, man.
So financials was in the news a little bit earlier. They rallied earlier. So I was thinking,
leading sector today.
Year to date, out of the S&P 500, out of all the financials, who are the 3 worst performers and the 3 best performers, and some honorable mentions mixed in as well. So we're gonna keep it simple. 3 worst performers. 2 smaller names to start. ADS and IVZ are right around down about 60%. Year to date, that's Alliance and Invesco. But Wells Fargo would be the biggest name out there. They are down 55% year to date. Now here's what I found interesting, right? Because there's a lot of people making moves on it, and there was a hedge fund that made an investment on it, and they had to send out an email to clients like, hey, this is why we are buying this.
That was smart, yeah.
And so the first paragraph just kind of made me giggle a little bit because, anyway, here, let me read it real quick. It said, we could fill many pages with the discussion of the firm's client relations with HR scandals, opening accounts for clients without their permission, putting wealth management clients in unsuitable positions in investment products, failing to respond to HR complaints, gender bias in hiring and promotion, illegally repossessing borrowing motor vehicles. The market has pushed this stock so far, blah, blah, blah. But I was like, man, there's a long list of things that they've done wrong. And they're like, hey, they're not great. But then they actually likened it to Facebook in 2018 in the 4th quarter where they were getting slammed by privacy things, blah, blah, blah.
Yeah, came after him hard.
So
Wells Fargo's been through a lot. And
yeah,
they did it. Every one of those things, they did it.
They're still there. Still standing. All right, so your 3 best performers. Your lack of words says 1,000 words. Or 1,000 words. Okay. By the way, Comerica and Comerica, Discover, and Citizens are all also down 50% year to date.
I mean, if you had to pick Wells Fargo over Discover, I mean, come on.
Where are you getting the greater discount?
I don't think. Well, it's about even today. Discover would be slightly more. It was down 52%. It's up 7% today. Wells Fargo was down 55. It's up 7 today. Basically the same.
Best performance year to date, PayPal, by far the best in the financial sector at 39, up 39.5%. But they were recently downgraded from outperform to market perform. And then you got MSCI and MKTX that are both there. Interesting to watch if you look at their chart, how they're way above their 200-day moving average, 50-day moving averages, both at resistance. They both got slammed down today, or the last couple of days actually. Now that you see that there. There's only actually 10 out of the 71 that are positive. Visa and BlackRock and PayPal would be the 3 biggest names. And those last 7 that are positive, it's only like 1% or 2. Like they're barely positive year to date, which it's better than being Wells Fargo down 55%, but still.
I'm sure they would agree. I think so. It gives you something to look at on both sides. Do you like the discounts? Do you like a Wells Fargo take a shot, or do you like your PayPal's Market Access, things like that? Market Access, pretty interesting company. It's a bond trading platform, but they're killing it. Sales are doing well. Obviously, trading revenue's up. What do you pick? Are you a strength guy or are you contrarian? You like to buy stuff that's fallen already?
Well, you gotta be the contrarian.
Okay.
Gotta be. And by the way, PayPal fits in that theory of, I don't use it. Nobody uses PayPal.
We use PayPal every month here.
Do we?
For something. It pops up on my thing. You paid somebody on PayPal, and I'm like, oh, hey.
Oh, I personally don't use PayPal. I don't use PayPal. So in my mind, nobody uses it. PayPal, Twitter, and MySpace are all the same thing to me.
MySpace?
Go to Twitter and vote on our poll.
MySpace, huh?
Yeah.
I would agree that nobody uses MySpace. Besides like Justin Timberlake. Because he tried to bring it back.
Did he?
Yeah.
Oh.
That was his thing. I think he invested in it or something.
You know what's funny is I tried to get into my MySpace account and I couldn't get in. And I'm like, I just want to know. Like, I want to see it. I emailed them. I'm like, hey, this is my old account. I don't remember like the password. I barely remember the email or something like this. They sent me the password and I was in. I was like, wow, I didn't have any form of validating it, but like you let me in.
You just sent the password. That was the end of it. All right. Hey, whatever you got to do.
Yeah, I'm done. That's it.
You're done.
I'm excited.
Okay, here's the thing. We got Autodesk reporting earnings, and I just hypothetically, I'm like, what if you wanted to buy some Autodesk? Let me propose a position for you. This is what I want to do, or someone would want to do. How would you go about placing the trade? So the idea is, if you look at a chart of Autodesk, it has, obviously it's done well. It's up nicely today also. But let's assume you say, if it goes higher, either way you have to participate. So either way you have to put on a trade today, right? But here are the parameters. If it goes higher, you just don't want to lose, right? If it goes lower, you'd like to have a bigger position. You want to buy it cheaper. You're a contrarian, right? You want to buy it if it falls. And if it goes sideways, you just want to make something. That's the only criteria. Because every time you buy a stock, you're saying up, down, or sideways, and what's going to happen? Am I going to sell for a loss, or take a profit, whatever? If it goes up, you just don't want to lose. If it goes sideways, you just want to make something. If it goes down, you'd like to acquire shares. Because Autodesk, they're killing it, right? But the stock's doing well, they're moving higher. You just don't want to buy it on the way up. We want to buy on the way down. We're contrarian, right? So they report earnings coming up here. Actual earnings date is tomorrow, actually. And normally they kill it on earnings. Everything's good. If you look at their Q1 earnings track record, it tends to gap down. So rather than be fearful of the stock gapping down, we're going to get excited and say, maybe it gaps down this time and we have a chance to start a position, make some money, or worst case, if it goes up, just not lose. I worry that they're doing really well and it's going to just skyrocket. I just don't want to lose if it skyrockets.
Yeah.
So we want to put on a position with that in mind, or think that through. Are you ready?
I'm ready.
I think we should go to the board.
Oh no.
Let's make it happen.
No.
We're going to go to the board for this one because I want to draw it out for you and show.
Okay.
Yeah, let's do it. Okay, so, mic's on?
Mic's definitely on.
I'm only going to do this once. Okay, so here's the thing. Autodesk, we know the symbol. Autodesk is the symbol. There you go. And the stock is moving around. Today it's up a little bit. We're sitting about $200. So, as we just mentioned a minute ago, if it goes up, I just don't want to lose. If it goes sideways, I'd like to make something, and if it goes down, I found a stock that maybe I'm interested in buying. I'd like to acquire it, but I'd like to buy it cheaper. So we're going through this mindset. They've got earnings coming up, so we really have no idea. We've given the stats on it usually gaps down, and we're going to use that as an opportunity rather than something to be fearful for. And if it goes up, we just don't want to lose. So here's how we're going to go about this. We're going to sell a call spread, right? So the first thing we're going to do is see what the expected move is on the stock. Right now, the expected move is about $10. So we're going to go up $10, and we're going to sell. We'll go like that. Sell the 210, and we're going to try to write and then talk.
Yeah.
So we're going to sell the 210 call, and we're going to buy the 212.50 call. So we got $2.50 worth of risk. In other words, if the stock goes higher than the expected move, which is $10 at the moment, plus or minus, if it goes higher than $10, we're going to start to lose. I don't want to lose.
Right.
I said if it goes higher, I don't want to lose. That's not the part of the game. But as long as it goes anywhere between 200 and 210, we stand to make a profit if we use the weekly expiration, which expires on Friday. So the first thing we're going to do is put this together as a package and sell that. And the next thing we're going to do is say, what if it goes down? We talked about wanting to acquire the shares, so we're actually going to come down quite a bit, and we're going to go to the 180, which is ambitious that it goes down that far. But we're going to go to the 180 puts, and we're going to sell the 180 puts. So what happens now is we collect money by selling here, we collect money by selling here. We want to acquire shares down here, so we're actually going to sell 2 puts. Yes?
I have a question.
Yes.
If it's plus or minus $10, why didn't you go to 190? Why'd you go to 180? Sorry, I didn't.
We don't need to. So here's the reason we're doing this. So by selling 2 $180 puts and selling 1 call spread, we can collect over $2.50. So in the bank, at the moment it's $2.70, so I'm just going to say $2.50 to keep the math the same. So in the bank, we're going to put in $2.50 that we get for selling this and this together. What does that mean? If the stock goes up past this call spread, we don't lose. This is free. This is a riskless trade at this point. So if the stock goes higher, and let's say this call spread loses money, doesn't matter because we collected $2.50. We can afford to lose $2.50 here. This would be a wash, right? So by selling that and selling 2 of these, we collect $2.50. If it goes beyond that, we don't care. Maybe it gaps up and has a great day. If it goes sideways anywhere between 180, well, say 177.50 and 212.50, anywhere inside of this range, we get to keep the $2.50. So, as I said, if it goes up, I just don't want to lose. If it goes sideways, I'd like to make something. And if it goes down, it has to go down to 180 in order for me to, well, it's got to go below 180 for me to start losing money on this trade. And to go down to 180, that's over an 11% move, which is outside of the expected move. So something rather dramatic has to happen to the downside. I personally hope it happens because I'd like to buy the shares, right?
Yeah.
I want to buy cheaper than 200, which is the current price.
Right.
And so that is how you put that trade on to not lose on the way up, make something if nothing happens, and acquire the shares for a position that you're interested in the stock anyways, and you want to buy shares of the stock, a way to acquire the stock. If you do happen to see Autodesk fall to 180 and the options expire on Friday, you collected 250. So your break even or your new average cost on those shares is 177.50, whereas you would have had to pay 200 today if you wanted to participate. So it's one way to look at it.
Does that strategy have a name?
Oh, I'm sure it does. Some sort of ratio, something or other. It's weird because I did that.
Yeah.
It's common to sell a call spread and finance it with a put. So, or normally you buy a call spread and you finance it with a put because you have a belief that the thing is going to shoot higher, but you don't want to spend the money on the trade. In that case, it'd be a free trade. In this case, we're just saying we think it's pretty much going to go sideways within this move. We can collect a decent premium for doing that. But if it happens to fall, love to be a buyer. So that's it. I am in no way suggesting that you make this trade. This is just an example of a stock that has an upcoming earnings announcement with a way to share that. So, yeah.
I feel like you're pushing your limits on that, but that's okay. I like this. I like this Dustin.
It's education.
It is education. You're right.
All right. What, back to the chair?
You got more?
Or are we done? Oh, let's be done, right?
That was a lot. Yeah. These
Okay, so today was Trading Tuesday.
Yeah.
Tomorrow is Wealth Wednesday?
Yeah. Wealth Wednesday. That's
Wealth
That's
Wednesday.
what I was gonna say.
Thursday is Technical Thursday.
Can we do this again? I mean,
Technical Thursday, and Friday will be Fun Friday.
that's my day to shine.